Hello, everyone. Welcome to the next episode of our low effort, low quality financial YouTube channel when we talk about financial independence and my route to freedom from money. So basically, not much changed. I still have only one job, which um, is kind of getting a lot more difficult to sustain myself in because it's quite hard and I don't really enjoy working there, but still, it's okay job. I'm just really tired and it's a difficult period while I'm being new to this work environment. And yeah, so I may be talking a little bit like I'm kind of sleepy, but let's move on. Let's check the next stock that I want to talk about, and this is the Broadcom. And let's just, I don't know, just threw this off. Okay, so Broadcom is really good stock to buy, in my opinion. I know it's not as good as some, like I don't know, Nvidia, but the returns on this company are really great, and I don't have the returns since 2012 or 2002, because I don't know if Broadcom was on a stock exchange since 25 years ago, 24 years ago. But still, 42% year return since 2012. It's kind of great. Broadcom also invests, or I don't know, researches a lot regarding AI and microchips and stuff like that. I mean, you can read about it on Yahoo Finance or whatever. To the fundamental analysis, the revenue growth is steady growing and net income is steady growing, and the company had less income in 2024. When I'm checking that is, I basically look on Market Chameleon and just look if the bars seem right. I mean, if they're going up, the revenue and the net income, as you can see, 2024 it was substantially less. I don't know why, to be honest. I don't care. Um and the fundamentals, revenue and earnings, income forecast, and the debt. Um I'm checking that on Scrap. This is target upside. Let's see. CFO. Okay, this is basically um our what did I call that? Sorry. Yeah, forecasts. So this is basically in next 2 years, CFO revenue, earnings per share. As you can see, from 10 or 5 years, this is pretty much going up year by year, which means this is really great. I mean, if company can mm, expand itself, that even the forecast of the earnings of this company is going straight up without going like up and downs or having a little like crashes. Um, it kind of looks really stable. So I don't know. I like how it looks, and this is um, the valuation right now. It sits on 1957 price earning ratio, but this is a 2 year forward earning ratio. I don't know what's price to earnings right now for the stock because I don't really care. I mean, I understand that some people say that the stock is um overbought or is expensive to buy at, like, 30 earnings per share, because this means you need 30 years to receive earnings for this company that will return this the price of the stock or whatever. But it's kind of different for tech stocks, I think, and the market is always looking forward, like what is going to be in next couple of years, 2 or 5 years. So yeah, um, that's my position on it. So the seasonals, 12 profit years, 2 loss. I think I actually have something wrong in here. Because 14 plus 2011 is 2006, but I think I should be having 15 years here, maybe. I don't know. To be honest, that's not very relevant. Yeah. Let's go to Broadcom. Oh, sorry. I actually have Broadcom on here. Yeah. And let's look for the seasonals. 2011. Okay, as you can see, Broadcom, I have that data from 2009, so that's why I couldn't get the mm, the returns since 2002. But that's okay. Um, I don't know why my chart is like this, but let's see. So we have 2 years on loss 2022. Definitely Ukraine conflict 2018. I don't know. I was probably a young kid back then. Sorry. I mean, I wasn't that young. I was already working. Yeah, and I was already working for like 3 years or something like that. Maybe more. 2011, but still counting as a profit. So basically, I look if historically on historical data, if holding this company long time is um, you know, is a good idea, and I think it is. And what else can we talk about? Oh yeah, sorry. Let's go back to charts. As you know, I'm using like profit zones, and I identify buyers and sellers when they are sitting basically, and not really when the sellers are sitting, but when there is less buyers and sellers need to compete for the price to sell their stock. It's like a market, food market or whatever. So as you can see, the Broadcom basically punctured my profit zones. This should be doubled. Yeah, and so we're still staying. There is not look above and fail, but there's a consolidation here above the recent tops, above the recent all-time high. And that's meaning that this balance zone is basically where the business is taking place. So, what does this mean? Two things. You cannot predict the future. You cannot predict what the stock is going to do. So, um, but going down outside this balance zone, let me maybe draw it a little bit better. Like this, you can see the bottoms and the tops, right? And let's call it distribution. And it's basically like this. When the most volume was traded here, you can see it was basically like this. The most time traded was in this zone, and we punctured above it. We're gonna see if the price is gonna hold, and yeah, That's basically it. I don't predict the future. I just think that's puncturing below this zone, and when the price gonna drop, that's a bad sign for the stock. But still, it can just the buyers can come on any other level and just buy up the stock. Regardless, I think this is a really good stock to buy. Um, I don't know if I understand technology of it or what Broadcom is actually doing. It's like, I don't know, semiconductors, I believe. Okay, what about the broad market? Because we didn't speak about the broader market, and I actually did some silly things previous weeks, like this month. One of the silliest things I did was, I mean, I'm still learning this, but I sold options. But I sold options, call options, while having the stock. So basically, I had 3 times leveraged Nasdaq ETF, TQQQ. I bought it like 54. I think this was my median of the price I acquired it, and I actually was holding it since the previous consolidation here. And I sold options. I don't remember the first option I sold. It was like, I don't know, 64, maybe 60 something, 66. And I've sold this option and gained $127. But the price spiked like to 74 or something like that. And I lost, actually, if I didn't bought this option, I would earn like extra 1,000 USD just by having TQQQ. And then when the expiration came, I basically bought back this option for a loss, and I sold another option because I thought, no way, this is climbing any higher than like 80, 78, and I sold it, I think, for 77, and I've earned like 300 something USD. And it wasn't that terrible because I've sold it for, it was a weekly, 2 weeks or something like that. But still, the price went up, and I actually got exercised, and I sold 100 of TQQQ for 77, and yeah, and plus the premium 300 something and 120 something, maybe $500 extra. But still, I don't know if TQQQ is really good for selling options, covered calls. I think it, because of the leverage, it moves so violently that it's not a good instrument. But still, I don't have money to sell like QQQ ETF or QQQM ETF. I mean, TQQQ, well, I basically had $5,400 to bought it, and I did. And this is not that much, It was a chunk of my portfolio, of course, but still, it wasn't as expensive as buying 100 shares of something that's priced like $250. Okay, so this was a mistake, but still, I earned quite a lot of money on it, so it wasn't so terrible. The broader market, let's see. So, this was just I just marked the top. As you can see, it works pretty well. The top was marked, and then we basically sold to the top and bought it back. So the buyers engaged at this level. You can see it. Why does it happen? I don't know. Well, I do know, but I cannot say for sure. So basically, if those guys sold, here and they were short and the price went above it, they basically covered their short positions on this level with the minimal um, loss. And this is how it happens. So they take on shorts, it doesn't go their way, or they don't fulfill their whole, contracts, and it goes above, it punctures, and when the price comes back, they fill, and they, from the sellers, they become buyers, and the price is spiked up. And this is how Nasdaq, the 100 and contracts are being traded or manipulated, whatever you can call it. This is basically business. This is business, nothing else. This is a price of sales. It's sales. It's not some magical, price of something. It's just sales. Sales of a contract. It's a product. So, yeah, we're ripping up. I don't know. This looks like unhealthy, but I understand that everybody thinks this is unhealthy now. And everybody is talking about, oh my god, we've did this huge movement up. I mean, on seasonals even you can see that we're basically on, compared to 25, 24, we're like pretty high. Maybe there will be a correction movement, but before the correction, I think there will be some movement back and forth, sorry. And we're gonna see. And this red circle is just look above and fail. But as you can see, it went pretty higher. I was trying to mark the consolidation, the next balance zone, when the distribution happens of those contracts. But it may be the distribution will be, quite higher even. Who knows? I don't have my position in TQQQ right now, because I got exercised. But what I'm thinking about is basically the upside. How to check, how to see if the market is overbought. And the one thing is, of course, percent of all-time highs. But as you can see, even on Broadcom, you can have periods when percent. Let me just. Okay. So the bottom one is percent of all-time highs. As you can see, there was a period when we were at 0, which means all-time high. A lot of times, and this is how market can move. So what about the upside? Well, it's best to buy a stock or ETF when the upside is high and there is a lot of movement, a lot of upside to be gained, and sell it when the upside is, very low, meaning that there is no upside movement to gain. But as you can see, upside also moves with the price. So this is not perfect, but if I can see, and let's go to the, I've created a watch list. And if I can see a lot of my stock having a negative upside, like this Palo Alto Networks right now, meaning that the price of the stock is actually above what people are thinking the stock is worth. So it's 30% more valued on the stock exchange than the people who work as professional stock evaluators, let's say. And if I can see this for a bunch of stocks that I have in my portfolio, and I can see that percentage of all-time highs is also, very low, like 2%, 1% for substantial periods. That may be indication of the market being in a good time to sell. And I'm actually thinking about Palo Alto, which I bought, and it's kind of risky right now because I know the NATO did some new business with them, but the price spiked pretty aggressively up, and I don't know. I don't want to sell a good stock, but I don't know if it's gonna hold this price, and I should basically sell it because we're at 0% of all-time highs, and the upside is minus 13, meaning that the price of the stock is above its upside. Yeah. So I'm quite tired, and this is gonna be it. The market is moving up, so that's great, but there is also I mean, it's a long road. I mean, I don't know what I want to do with this money. I don't know why money is so important to me. Maybe because I grew really poor. Still, mm, well, I have a debt on me for my flat, so that would be nice things to have just as much money as I can to pay off and feel secure, don't feel like a piece of shit when I lost my job and I was like, afraid that this is gonna be basically beginning of the end of me. And I will be like homeless. I will lose everything. I will go into debt and would not have the means to pay it. So, um, yeah. So this is my like this is part of my portfolio. U.S. stocks. I actually wanna start it to acquire European stocks to diversify mostly um mostly by having euro and USD because I don't want to hold all my money in USD. I don't know why. I'm just afraid. And I've picked some stocks to look into, and I actually bought some. And let's maybe, yeah. So Louis Vuitton, Sap, Hermes, Rheinmetall, which I'm not going to buy to be honest. The London Stock Exchange, Airbus, and I used um, the same research regarding those stocks that I did regarding American Stock Exchange, and I've picked actually 11 right now, I think, that I want to buy. I don't want to have from here. Um, yeah, Louis Vuitton, I don't think I mean, Hermes is better stock. And it's the same thing, company, luxury goods, and Rheinmetall was performing quite bad before the Ukraine conflict, and it only gained a lot of revenue because of this conflict. And before that, it's not a great company, I believe. The Legrand is I don't know Sandvik. I don't Sandvik Swedish. I don't think I've picked this stock. I don't think it's a really great stock. And yeah, yeah. So Siemens, Schneider, those are interesting stocks. SAP is also beaten up because of the CIS software as a service apocalypse, and I've actually gained quite a bit from buying stocks like ServiceNow, uh, Palo Alto, FICO, I think. Yeah, and I want to buy SAP as well because I think there is an upside for those stocks softwares, and I don't think it's going, because of AI, it's going anywhere. uh I actually think those companies can gain quite a lot by using AI. I don't know, we're gonna see. I can be wrong. The best thing I think is, if you're right, add to the position. If you're wrong, don't add to it, or even reduce the position or kill the trade. And this is how you invest long term. Okay, I've talked for a long time right now, and I'm quite tired. So thank you for watching. I hope you learned something today. Maybe I wanted to create like people find very interesting, like this super A, B, C, D, when you take the stocks and you put it into categories and you tell the world why you think that way. And I don't know, I don't know that much regarding companies and um what business is the best business in the world. So yeah, I'm just, I don't know. Maybe I will do something to this like this, but it's not gonna be very professional. Okay, thank you very much and goodbye.